Welcome to the Beacon. Welcome, Chris.
What's up, guys?
This is Chris. He's one of my buddies. Chris, kind of go into a little bit about you and your background.
Not too much to it, but locally, I grew up here in PA. Went to Redland High School. Went in the military. Got out of the military. Went to do some college, and then now I work for the Navy as a organic repair specialist. And then I dabble in crypto and some investments, and just read on my house.
Nice.
Pretty basic.
What do you read?
Primarily, I read science fiction and/or I read a lot of journals on crypto technology.
Okay.
And then I do a lot of podcasting since I'm busy doing housework. I actually do more listening on podcasts like Lex Friedman, Joe Rogan types. While I'm remaking my house to redo my basement.
Mm-hmm. And so typically how we normally start this is we go through like a gratitude session. Josh, I'll let you lead the way.
Okay. So some gratitude. I would say first and foremost, I'm always thankful for God and the universe. I'm also thankful for the Beacon, allowing us to meet awesome new people now weekly. And another gratitude that I've had due to last night, my son would not go to sleep and he continued waking up. What that allowed me to do is practice patience. My patience was tested about 4 times last night through the span of 4 hours, and I came out on top of that. Eventually won, and he did go back to sleep in his crib. But yeah. So I would definitely say my kids allowing me to practice my patience. I'm gracious for that. How about you?
Still just everything is kind of the same as last week. Cody, Shane, guys running, helping me run the bath business. They've been doing, great work for me, and that stuff's been paying off. You coming together and kind of just, we've been, putting a lot of stuff together. Coming up here, and really just being able to have the time to slow down and the time management that gives me a lot of freedom to, do a lot of work for myself and, enjoy my free time. What about you, Chris?
I would just say my health overall, man. You gotta have health, number one for me. And then, friends and family. I mean, without them, life's boring, right? Yeah. You have to share it with someone, share your experience with someone. So we all get old and gray. Everyone dies away. Ain't gonna be no one to tell. So I'm pretty simple, straightforward. My health and friends and family.
Nice, good, awesome.
So really, what I wanted to bring you on and talk about was like the crypto stuff, because we had that conversation a couple weeks ago at my brother's house.
Oh yeah, wait a second. I want one of your shirts. My bath got shirts.
I got you. I'll get you a Beacon one then when we make it.
Yeah.
We're gonna start pushing those, just a bunch of sweaters and stuff with the Beacon on it. Okay. But yeah, so the crypto, I don't really know too much about it. It's just not anything that I personally invest in, but I thought it was like a super interesting topic. Mm-hmm. So what actually got you into the crypto in general?
Well, I'm not a big fan of like the stock market because every market's manipulated, but you have market makers, that will hold your assets, and like you've seen in recent history, they can also liquidate you. I'm a big proponent of owning your own identity, your own assets, and then use it a decentralized network. You have instances where, like on the internet, no one really controls the internet, but you have third-party, sites that are trusted marketplaces and/or platforms like Apple, right? So we all agree that we trust Apple enough to hold our identity, but then Apple also has the power to keep us out of our own information, our own identity. They sell off our information. On decentralized networks, like Ethereum, that's not the case. No one can shut you out. You can own your own identity. You can own your own assets. There's no in between. You have a middleman of necessity, which sometimes you need, like executing a will. You have a trustee. That's a middleman of necessity versus a middleman just to have the middleman to be there to take a chunk out of your assets or control your identity. As you can see with social media, people don't like so much.
Yeah.
Mm-hmm. Yeah. And So when you first got into crypto, what did you first get into?
So I first got into Cardano, ADA. I looked at a couple different things. I looked at community, I looked at technology, and scalability. So Ethereum has the community. They don't so much have the technology, and they don't so much have the scalability. Because when they built it, it was kind of like a test net. They didn't do it by peer review. They didn't do it by research, not science based. They got a lot of great minds together, like Vitalik, like Charles, and a bunch of other guys, and they paid them up front. And as they called the golden handcuffs. So all these guys left and made their own platforms. So when Cardano came about with Charles Hoskinson, it was very much the peer-reviewed, science-based. They have 180 science reviewed papers from all over the world, different universities, and they went and they actually decided what blockchain was. They said, we don't know what it is. What does it mean? How can we scale it? So when you look at Ethereum, you have to pay to get your transaction through. So we compete. So if I put my gas fee, that's a transaction fee, at $5 per year, $7, you're going to jump ahead of me, right? But if I own a business like my bath guy, how do I know predictable costs if my transaction fee one day is $10, the next day $100? It's not sustainable.
Gotcha.
So Cardano solves that issue.
Gotcha. Cool. That's actually how I started too.
And what,
Some other ones.
So
some
like,
others.
what is like Cardano's fee?
So Cardano's fee right now is about 26 to 30 cents. It's about 0.3 ADA, but you can also put multiple transactions into one to get it cheaper. They're working on that now.
And just for like people that don't know what ADA is, what is ADA?
Cardano, ADA is Cardano. That's a ticker symbol. It's called ADA. Just like, you have stocks like, Visa with a V. It's Cardano. It's its ticker ADA.
So the name's Cardano, but the actual ticker for it's ADA.
Yeah.
Okay. So they're interchangeable.
Yeah,
That means the same thing.
And what would one of those compare to be like $1?
Right now it's about $1.33 per share. Okay. The all-time high was about $3.10. And you have everything's controlled by Bitcoin right now.
And how long ago did you get into that?
Beginning of the pandemic, I would say March of 2020.
And what was that at?
It was at 4 cents. So
you did pretty well.
Yeah, I did pretty well.
That's awesome.
And then what got you farther into like the horses? I think that's like one of the most interesting things.
NFTs. So NFTs are interesting. I had a good buddy of mine that showed me an NFT, and if I look at art, a Picasso, I'd probably throw it in the trash. I don't know what it is, but I can understand value. And just because I might not understand it, like gaming, I don't game, but I understand you put time to something, you're going to spend money in it. So a lot of people buy skins on Fortnite, like my son does, and I get it. So with that being said, I did market research, and I looked at Ethereum, and like Ethereum bulls went for $169 million. So I said, well, if Cardano is based after and similar and took lessons learned from Ethereum, the market should grow the same. So when NFTs first came out in March, I just started buying them all up. I didn't care. I said, I'm going to, play the numbers. If I buy, 1,000 NFTs, if I get hit on 20%, I win. So that's pretty much what I did. So as I went in and learned more about them and more about the utility, it's not just art. You can buy and sell, assets, non-fungible tokens, what it stands for. So a good example would be if, you bought a new car and that car comes with, 20 oil changes for free. Well, if you sell the car now, you can't pass that on or monopolize on those oil changes. But if the dealership would give them to you in non-fungible tokens that are vouchers that can't be duplicated because they're timestamped on the blockchain, and it's pretty much like a, tamper-proof, I could sell that to you. That could be separate. So now when I get those 20 oil changes, I don't need all 20. I change my own oil. I could sell 5 to you, 5 to you.
Gotcha.
Now I can monopolize on that asset.
Okay.
They're going to they're already putting stocks on the blockchain. You're going to be able to have your mortgage on the blockchain.
And for everyone out there, what's the blockchain? Like, what is that?
The blockchain is just a ledger, right? It's your checkbook that has all the transactions on it and the history on it. So each coin has every history on it, the previous transaction history on it. And for a proof of stake system like Cardano, the histories have to match for the algorithm to allow the transaction through.
Okay.
So it's like a staking mechanism that I let the network borrow my coin. When a transaction comes through, it picks a random pool and it says, okay, Chris's coin, if the coin transaction coming through matches Chris's coin, it's a valid transaction and allows to go through. Some of that fee goes to the treasury to fund future projects called Catalyst, and then other parts of the fee goes to the actual pool, which I get. So I get about 5% by staking my coins.
Gotcha. Okay. Wow.
Where a bank gives you, less than 1% if you're in savings, checking, less than that.
Yeah.
And then that's where it's hard for, once again, you look at the technology. the banks can't keep up. They're actually joining. So the banks are actually buying in to like places like Bitcoin because they don't need to own the network or control it. They just have to, buy the coin.
Okay.
Own like a large stake in it.
Right.
So ultimately, besides keeping your money in a bank system, it's almost beneficial to find like a blockchain to keep your money.
Well, they do. They have what's called Celsius right now is a perfect example. So Celsius. So for your mom and pop that don't want to control their own, say, asset like me, I find the staking pool. I find the most competitive rate. I throw my ad in, I watch it, get my return. Well, if you're a mom and pop, you don't want to worry about that. You can actually hold your money in what's called Celsius. Celsius will be on the Cardano blockchain. It's on Ethereum now. And they will give you, instead of 5%, they'll maybe give you 4% because they keep 1%. But you can also loan that out in the future. So I can keep my staking rewards, also do DeFi, decentralized finance, loan it out for 7-8% and get an 11% a year return.
Gotcha. Holy shit.
So a bank can't compete with that. And I can make, with programmable smart contracts, I can make the language whatever I want. A 1-year loan, fully backed, 80% backed.
So you're basically your own bank.
Correct. You get your own line of accounting that you control.
You're able to basically be what an individual bank.
Correct.
Okay.
Yep. Yep. On a trusted network that's decentralized that no one can tamper with.
I was just about to say, so what kind of outside influences there's nothing, right? Like the government can't come in and be like, okay, cool, that was awesome, but no, game's over, guys. Well, we're done.
That's the fear, right? So that's the fear is the government picking winners and losers, like i.e., the SEC was just caught, the higher up SECs were holding a lot of Ethereum, right? So they actually got together and tried to say, hey, what is the security, right? With Ethereum in the back behind closed doors, then went after Ripple. So that just came out. So now Ripple will just get a small fine, I take it, and then they'll be good to go. But like places like Cardano don't have to worry about that because they were smart. They did the research. They're based out of Hong Kong, no SEC, no security. But I mean, but they could theoretically, that's the big worry is that, governments can come in, pick a winner and loser and say, hey, this is what we deem, permissible. But like there's ways that Cardano that's built differently that people don't understand when you look under the hood, the ways they can get around it. Perfect example. When I stake, that stake pool operator, whoever makes that pool, doesn't have my IP address, right? So they don't know who I am. That's why it's decentralized. Okay. But the government's going to say for every wallet out there and for everyone getting stake rewards, we have to know who they are because guess what? Someone like me that has a lot of tokens, if I get 20,000 rewards a year and the token's at $2, that's $40,000. They want to be able to track that so they can get their taxes.
Yeah, yeah.
So on Ethereum, you can't do that either so much, but you don't get a reward. They're moving to proof of stake. So that's not a concern quite yet. But for Cardano, what they could do is they could say, okay, look, Chris, it's called the DID system, identity system that Cardano has. They say, okay, it's pretty simple. I sign my smart contract to that pool operator that he gets to see my ISP address when I get my staking rewards. And then not only does he get to see it, but the government gets a cryptographic key. They get to see it, but everyone else is blinded to it. So think of like, an encrypted email. Only you and the person receiving it can get the encrypted email. They're going to do the same thing with wills. Like, hey, if I die and you two are my kids, you each get your own thing, but I don't want you to see what Tyler got and he can't see what you got. But there's a third trusted party that I want to see what both you got so they can settle it. Okay. So that's why Cardano was built, so you can actually change that parameters on the network. Where Ethereum, they say it's like driving down the road trying to change the wheels. It's very much harder to do what Cardano did in the front end to what Ethereum's trying to do now, moving to proof of stake as well.
So the fears behind it, how do you get by them?
I mean, like anything else, there's people, I think there's age sectors, right? Like for me, when I first got my smartphone, I tried to show my dad, he's like, I don't want that thing. I don't understand it. I have a computer, but now he uses it for banking. I mean, he even does his crypto on there. I mean, Google, Maps. So now he uses it for a necessity and a comfort versus before, a technological advantage, right? When iPhone first came out, it doesn't do all the things it does now, or just like the computer came out, they didn't have Java, so you didn't have right? So the maturation that what we see now won't be around in 10 years. You'll have much more use cases. And then, it's like asking someone in the early 2000s, when someone like the guy who made eBay, he went to Fortune 500 companies and he said, I have this idea, eBay. And after the whole entire presentation, they said, well, what's the internet? Right. So now we all know what the internet is, but back then try to imagine explain the internet what it could be. Right? So I think it's the same growth pattern. You get more and more people in. I see people buy one NFT a week later, they're up to 4 or 5. Because if you look at it, right or wrong or indifferent, the asset grows. I mean, you have a limited amount whatever the case is. It has some utility. Like think of a Grand Theft Auto, right? You're playing through Grand Theft Auto. There's only 5 Lamborghinis in the game. Well, imagine if you can own that and not the game creators. Well, that's value, right? Like, or a skin. You own a rare, skin in Fortnite from season 1. You have to sell your whole account for that, which they don't like. The game owns the rights to that. Well, what happens if you own the rights to that? Or if there's
So that's what I was kind of explaining to you that he was talking about.
Or what if there's a portal in a game, right? Like, let's say I portal into a game, right? And then when you come through my portal, like say it's on the moon, like a metaverse style, you come through the portal. Well, I own that plot of land. I can have a virtual store there where I can sell you my NFTs. I can sell you skins, right?
That's what I was
like. All these use cases that people don't like, I fully yet use or understand, I think are going to come into play. And then we're going to get artists. Artists are now going to put a 1-minute songs like Snoop Dogg did it on the blockchain. Imagine if you release 10,000 of those. That's a new age CD that now I can resell. Yeah, sure. I can go online and listen to it on Spotify for free, but I can capitalize and resell that. I own the rights to that. So I can resell it to someone else. So if I'm in a metaverse space and I want to listen to music, if that's inside my wallet, it should recognize it and allow me to listen to it. Where the metaverse won't recognize anything else of the blockchain because the blockchain in itself is deaf, dumb, and blind. You need what's called an oracle to go outside the blockchain to retrieve that information and or sit inside your wallet.
So let's dive a little bit deper into the metaverse, right? So people, that's like really new, and like
it's a buzzword.
Yeah, it's like why do you think it's going to be such a big thing?
Well, So here we go. So it's like asking, why do you think gaming is going to be such a big thing? Like the metaverse can really be anything. I mean, the metaverse is truly could be Call of Duty. It could be a 3D world. It's really just an immersion of a game. And what the NFT space is kind of the buzzword is going to be the metaverse, but you own it, right?
Okay.
So like you can create a metaverse like with the Oculus, right? But Facebook owns it. It's closed off. You have to get approved to put, something on their Play Store, call it on their App Store. Where something like Cardano, any developer can build it. So it pushes power to the edges. Any developer that used to work for a big company can now do it themselves. They actually go get funding through Catalyst, build their own if the community votes and approves it, and then you build. So when I build, I can use what's called the Plutus backend, tie in my wallet, tie in my infrastructure to the Cardano blockchain, and they can't keep me out. So if people want to play it, they'll play it. So how that's unique and why the metaverse can be so big. So if I'm on there, I'm on the metaverse, say the moon, there's a moon project out there. It's called Artifact. And they took pictures and, not them, but someone scanned the moon, the near side, which we can see, and the far side we can't. So I'm sure they simulate the far side to some degree. And I own 1.8 million acres on the moon. Now I got the far side. I was unlucky, but someone got the near side. So if I got the near side, right, and they can make a portal, I can portal into the moon. We could play, jump around, have meetings, however you want to do it. Whatever you want to build on there, you could build on your own property. I can even sector it out. I can cut off an acre for you, just 1 acre, and make you your own NFT. Now you own that. You can build on it. I can't destroy it. I can't take it over. So that's the utility there is like someone gets ownership. And then think about this. There's 22 moon landing spots on the moon. That's where they're going to put the portals. So if I want a portal to Mars, you have to go on my spot, my moon spot. Maybe that costs a penny, 2 pennies. Well, then you get paid, not the game.
Okay.
Right.
Okay.
And there's royalties. Like you get the artists and stuff, and the creators can get 2.5%. So if I sell it, they get 2.5% royalties. So that's why I see musicians going that route.
Yeah. Because
with CDs, they got cut out, right? With NFTs, every time it resells through a smart contract, they can automatically get paid a 2.5% royalty back to them.
Okay. So besides having like like their song where people can just have it, they kind of make it more exclusive by doing it that way?
You can make it more exclusive, absolutely.
Okay.
Or you can make it 100,000 copies. I mean, but I guess end all be all is you could prove ownership. Like they say 80% of sports memorabilia is faked, but as long as you believe it's real, it's all that matters. Well, here, yeah, you could take like, for instance, they call it a space bud. It's like a blue chip, really well-known NFT on Cardano, right? The cheapest is about $5,000.
Okay.
Right. And they say, well, I can steal that. Well, you can steal Picasso and enjoy it. I mean, there's fakes all day long. There's big business in that. Don't get me wrong.
Yeah.
But people also appreciate the history and the richness of an authentic piece. And you can prove it because when you add something to the blockchain, it timestamps it and you get a policy ID.
Oh, shit. So you have like a certificate almost. Like, so you could prove, hey, this is real.
Yeah.
Like, this isn't like a fake copy.
And you can't backdate it. So if I wanted to add that same space bud, say to the blockchain now, it wouldn't have the date of March when they minted. It would have the date of now. So it's easily disproven.
Gotcha. Wow.
So this metaverse, right?
Yep.
where is this like? Is there going to be like a central location where people like everybody ties into one? Is there going to be multiple ones?
Right, good question. So for this to work, they call it the Web3, and there's a hot debate right now with like Elon Musk, Jack Dorsey, like they're disproving it. But think of your router, right?
Okay.
And your phones. If you guys went to Hong Kong or Singapore, imagine if your phone had to match the same router. Like, so if you had to have a Samsung phone, you need a Samsung router. Well, it wouldn't be usable, right? Because what's the chances you have 1,000? So all routers are agnostic. They don't care what phone's attached to it. They recognize it all.
Okay.
That's how the blockchain is going to be. You're going to have to be able to move your identity through bridges, say from Cardano to Solana to Ethereum to Bitcoin, right? And eventually, ideally, I'm assuming most everything will be tied into each other if you want to survive the next generation, because I need to be able to move my assets and my identity just like now. Like I can go on a website and I can move my identity and assets through PayPal. Right, I can attach my PayPal account to everything. So that's what's going to happen in the next 5 to 10 years with the blockchain. If I have an NFT on Cardano, or like, and I want, it's a metaverse NFT, and I want to go play on Ethereum, I'll be able to burn it and repopulate it on Ethereum at the same time. So now I transferred my asset from Cardano to Ethereum, so now I can play in their sandbox, right?
Wow.
And then same thing with identity. I mean, you're going to have to be able to cross. And they're making bridges now, like Solana has a bridge to.
So these companies are actively making bridges?
Yeah, they're making bridges. I mean, some are better than others. I mean, I would say, like, for me, I'm about decentralization. Like Solana, it's great technology, but it's controlled by a few validators. So if their network screws up, they just restart it. Well, that's bad for business, because if I'm putting $100 million through there and the network shuts down, I could potentially lose that, right?
Oh, shit.
So that's why, Ethereum, as much as it costs a fortune, it doesn't break, it doesn't shut down. It just gets more expensive. So I do appreciate that aspect where you might lose your transaction fee, because if your transaction fails out, you lose that. So in some cases, it'd be $80, some cases $800. Mm-hmm. So I don't play in that world, but at least it doesn't just completely stop working.
Yeah.
How many different worlds are there?
For what?
For like NFT worlds, basically.
Oh, so there's,
if digital frontiers.
Yeah, you're looking at smart contract blockchains. You're probably talking about like the Elrons, AVAX, the Solonas, the Ethereums, Cardanos, and there's definitely a few more. So I would say probably 5 to 10 growing ones, but there's gonna be more than one winner. You're talking $1 billion markets. You're talking about Ethereum. Ethereum's NFT space is so big. I think OpenSea said they did like $3 billion this year.
Holy shit.
It's insane the amount of money they did.
That's how people are buying NFTs, right? It's through Ethereum a lot of times.
A lot of times, but now it's going to be your rich people want to play in that, because the average person can't afford to spend $400 to get the transaction there and then spend another $600 getting an NFT, right? So you just put $1,000 in and $400 of it went to waste because that's the transaction cost. On Cardano, you could buy an NFT for, say, 2 ADA, 5 ADA, which is $6 to $7, and then pay 26 cents for that transaction cost. So if I want to list on the OpenSea, I'd have to spend that transactional cost to delist it as well. So when I send my NFT to a smart contract that holds it there, you want to buy it, you send your Ethereum to the smart contract, it switches for us, right? Done deal. We can't mess with it, so to speak. But if you want to delist it, say, hey, I don't want to sell this no more, I have to pay that transactional fee to get it out of that smart contract. And a lot of people it's not worth it. The NFT itself's not worth it. So, I think the tides will change eventually, where you'll see more and more people, you take their Ethereum money and move it over to Cardano, Solana, Algorand, Ergo. I'm a big Ergo fan. So,
gotcha.
Yeah. So, when you got into like the actual getting into buying and selling, the fears behind that, right? So I'm sure now that you've been doing it for a while, you don't really have those effects. But in the beginning, right, I'm sure you were like watching it.
Oh, it's a new market. So in the beginning, I said, like I said, look, I understand we're so new. The first 3-4 months, a handful of these projects might do well, a handful might not do well at all. But when you're talking 2-3 years use cases, but I knew once again, like Ethereum, the very beginning projects, a few of them that really kicked off. They really worth a pretty penny. So I bought I bought a Space Bud right away. I bought these things called Claymates. I bought 40 of those. And end up being, of all the projects I bought, I probably have 1,000 NFTs. The Claymates end up being probably the number 2 overall NFT on Cardano, and they're called Blue Chip now. And in the beginning, I was like, am I doing this right? But there's no test case. So, I look at it and like, okay, did I ever buy in this one area and, underbuy over here? So I do evaluate every week. I had a spreadsheet. I had a partner I was doing it with. We look on them on Discord on secondary markets to see what things we're going for, find good value. And then now all those claymates are worth $1,200-$1,300 at the minimum each.
Oh shit!
I mean, I probably have one that's worth $80,000 now.
Holy shit!
And how much time did you put into the research behind it? Would you say?
So that was another thing. So it's like I sat down, I thought about it. I was like, if I'm going to be successful, I have to understand what a blockchain is. I have to understand what a layer 1 is. I have to understand what we talked about, like scalability, to the technology. The community side has to be a big community there, like Litecoin has a big community. And then I have to go, okay, what's coming and where's the future hold? So once again, when I knew smart contracts were coming out, I knew NFTs were the move. So when I looked at it, I said, okay, if I do $500 of research on the front end on what is a blockchain, what's good technology, and the barriers of entry for all these blockchains, where do I want to fit in? And I didn't want to play on multiple platforms because my time is limited. So I tried really picking what I thought would be the best platform. Mm-hmm. And so I picked Cardano. So I don't do Ethereum, Solana. I mean, there are some good ones, but it's just not for me. So I put about 500 hours of research and reading, watching videos, a ton. And then I went to the NFT side, which said art I don't understand at all, but I have some buddies in it, and they play on the Ethereum side. So once I got on the Cardano side, it just made sense. Once I hopped in, understood the dynamics. I understood how I wanted to build out my portfolio, what I wanted to keep long-term, short-term, flip immediately. And I'm still doing that this day. I'm buying and flipping new projects as they mint. I'll mint something for 30, 40 ADA and sell for 120, 150, sometimes 200 within a day or two.
So you can have some pretty big success.
Oh yeah. People do this for their job all day long. I mean, I'm lucky enough to where I can buy numbers. Mm-hmm. So if I know like Zombie Chains is a big following by Cardano Dan, he's a creator and he has like 500,000, 600,000 followers. There's 10,000 of them mint. These things sell out within hours. So I know that. So I get on there, no rush. I mint 10 to 12 of it. And, I pay 40, 50 ADA. I think his was 65 ADA. I'll flip. I mean, instantly can flip for 200. Those Moon ones I bought for 50, they're going for 300 ADA right now. So, and that's outgrowing the price of the coin. Even if the price of the coin drops historically, the NFT in what's called a bear market will probably go up if you have the community. So as we flip from like more of a bear market, I think we're going to be a bullish market. I'm going to trade out most of my NFTs back to coins, and then I'll trade my coins around and do percentages there.
Okay.
So just to kind of, switching back and forth, following market trends.
Wow. Yeah. And so the horses, right now they're not really able to do anything.
No. What they did is it was clever. And this is the way I like they do it. So this is why I didn't like, Charles talks about this quite a bit. Charles Hoskins, the creator, he says, when you create something, you don't technically want, initially to use the community's money. Ideally, you want to go VC back, meaning you go to a couple big companies or investors, say, hey, listen, here's an idea. You get, 5% of all the tokens, fund it. And then that way, hey, if it fails, you're not losing me and yours money, right? I understand that. That's good. For a network, I agree. That's what Ethereum did. They used the community's money. It worked out. But a lot of times it doesn't. So that's a problem, right? So that's why people distrust, crypto. And I would say 99% of all cryptos are scams, right? It's copy and paste coins. They're not making their own code. They're not making identity solutions. By and large, it's just.
So at that point, like, how do you know you don't have one of those like 99%?
Right. So you look at the code. So Cardano they used Haskell code, that's what they used in the legacy system for banking.
Oh, okay.
And they rewrote it, right? So it was a high assurance. You could test your contracts before you release them. On Ethereum, you can't test them. There's no test incubator, so you don't know if you have a flaw in your contract or not. Mm-hmm. So the way they did it and the way they can scale to millions of users fairly easily with Hydra and adjusting network parameters like block sizes, times, going off chains, side chains, extended use TXO. So all this stuff you can look into, and you realize pretty quickly, okay, this has the meat and potatoes to do well. I mean, they have government contracts with countries in Africa to onboard, 5 to 10 million students over the next 2 to 3 years, because that's what this technology is made for. After all, we won. We hit the birth lottery. We have Social Security cards.
Yeah.
We have banking. We have infrastructure. Now, 70% of people in Africa are under 30, but they have smartphones, right? Their infrastructure is getting better. They're eager, but they don't trust their government. So what do you have to do? Bring a decentralized system in like Cardano, And then now people will plan the network. Like the average farmer in Africa, they need $60 to $80. They could triple their crop, triple their yield, but the remittance fees are 10 to 20%. So what's that tell you? So like say someone here comes here to work and sends money back home, one paycheck out of the whole year, 1 month of the paycheck of the year goes to the banking institutions. So, if they have to pay back $20 of that in profit, in interest, the farmers can't afford it.
Yeah.
So that's why there's a huge war going on. Even China, and China's investing over $1 trillion, the one Road Belt Initiative, and Africa is a huge part of it. I mean, it's really growing. So we will adopt it. We will use it, but I think we'll be last to use it because we don't need to. Yeah. Right. Like, I mean, at the end of the day, we're comfortable, fat, and happy. So
do you think that's like we could fall behind though?
Oh yeah. Well, no, I mean, the United States did this study. If they could have banned Bitcoin, they already would have done it. But it's a national security concern because all the other countries are doing it. I mean, we won't go down the rabbit hole too much, but
that's what we're here to do. Right. Let's go down the rabbit hole, dude. Let's go down it.
Right. Yeah, that's a tricky question. I mean, we don't know what the future is going to hold, but I definitely think, like Cardano even said, they're not interested in going to China. They don't want a country weaponizing it to spy on their citizens, right?
Okay, yeah.
So I mean,
that's the one you use, right?
Yeah, the Cardano one. I like that and Ergo. They're my two favorite. Ergo's some really good technology. It's funny because Cardano takes a lot of good things. They took stuff from Algorand. They took stuff from Ergo, and they built upon it, and they're trying to improve.
They came in later.
A little bit. Well, they've been around since 2016, but they did all the research up front. I mean, they did.
Yeah, so like they let people kind of go out and do it, and then they
experiment. They call it the crash and burn method. And when you're playing with billions of dollars, crash and burn method, I don't think is so fun. Right? Like, you're trying to build industrial grade systems. Like for instance, you have Chainlink, right? Chainlink's an Oracle that goes outside the smart contract and applies data to the smart contract. So what's that mean to us? So say we're betting the Titans game, Titans Eagles.
Okay.
Right. We can go to ESPN and that'll be a high assurance that we get the information we need, right? We agree on that, right? No problem.
Yeah.
Well, what happens if we want to do industrial grade? I own, say, My Bath Guy, right? And you want to look at Lowe's, Home Depot, and everywhere else, and you say, I need to know what the best bang for my buck is on mortar mix, right? Well, if you only get one data source, say Lowe's, and they're high, that can really screw you as a business owner, right? Because you only get one data source. Or if you're even a gas station, you want to look at competitors. Where you do Oracle pools, like Ergo does, you can pull, if you're a gas station, you can pull Sheets, Hess, Rudders, right? And then you take the average, right? So whoever's in consensus with the average is 60% consensus average. They pay them an incentive. Thank you for being right. Bam. I use that data center in my contract, and either to buy, sell, whatever it might be. And now I have a better chance of being within the market, what the market actually is. So that's an Oracle pool, and that's what Ergo does. And I think Chainlink might be working that way, but it's going to be a lot harder for them. So it's pretty cool technology.
And so as we move forward into the cryptocurrency, right? And you think obviously things are going to fall off as far as different companies that have built things.
Well, you can look at Netscape, for instance. That's not around no more. AOL versus,
I remember
people still have AOL, dude. People still have AOL. Not the dial-up, but
you look at the market share. They're less than 1% of market share, right? I mean, and that's what's going to happen here. But I think Cardano has the meat and bones to stick around. Now, if you're talking about the apps, the dApps, decentralized apps that live within it, they're going to come and go, right?
Oh, yeah.
But something like SpaceBuds, which is really the first, it's kind of like the Aaron Bulls. I think that's here to stay. Everything outside that, who knows, right? It's just all a guessing game. It's timing the markets. What market cycle do you want to exit on? What's your goal? So everyone's different. For me, I'll be exiting somewhat this market cycle for some things, and I'll be waiting a market cycle or two, so 3 to 5 years out for some other things. So my SpaceBuds, I won't sell that for 3 to 5 years, and I'll probably make a killing off of it. But other stuff that I'm buying and flipping now will be sold in the next 2-3 months. Other stuff a year, right? So my horses, probably a year and a half. You mentioned those. That's it's a virtual gaming platform, or it's going to be a virtual racing platform. It's called Equine on the Cardano network. They have 14,000 horses. You can get skins. You can get jockeys. You can train them. So give an example, they based off real life metrics. So every month for the horse is actually 1 year. So you can, your horse, start racing at 6 years old. It dies at 18. Once it dies, it's dead forever. If you have what's called a pioneer horse, you can remint it, get a whole new one in its place. That's its own value. So if I have a really bad horse, I know it's about to die, I can resell it to someone because they know they're about to get a whole new random horse, different metrics, different speed, agility, right? So it's kind of cool. You can breed them, but you don't want to interbreed. You want to make sure you find, the right breeding matches.
This is all virtual.
It'll be all virtual. You can watch it. You can train them. So I'll be able to go on the track, pay 2 ADA, be able to train them, once a week to get their speed up and whatever. Or you don't have to. You can just sit on them and hold them as an asset. But when you race, you'll get ADA. You'll get actual ADA in return. So
wow,
there's different brackets. It's pretty.
People, you have jockeys and stuff
jockeys.
too. Yeah, and people can like rent your jockeys and rent your horses.
That's gonna be down the line, right? I can use the smart contract, right? So ideally, that's what I want to do. Is the secondary use cases? These are enormous. So I went and bought all these skins up, right? Because the skins never die and they're going to be rare. Yeah. If you have 14,000 skins and this thing grows to 100,000 users, any skin itself will be rare, right? But then I have these alien skins. There's only 600 of them. I own 30 of them, right? I bought a bunch of them. I'll say, hey, in a smart contract, if you want, say you have a good horse, you want a cool skin for him, you can run him for a week, right? Out there for 10 ADA. You pay the 10 ADA. He goes in your wallet, but you'll have holding rates, not selling rates. After the week, if you don't pay 10 more ADA, it goes right back into my wallet and takes no human interaction on me. I can use drop and play programming that they'll have with Plutus eventually. Who knows when? Another 6, 8, 10 months, year, doesn't matter. And then that's an asset I can always get residual income off of, and then eventually I can just sell it.
Like right now, we're in the training of the horses stages.
Well, just about to be. I think in February they just released. So what they did is really cool. How back to that, I was going to say, it was really cool what they did. Is they said, okay, mint these, buy these. And when you mint and buy these, we'll take the $3 million dollars we made off you, and then we'll go hire a bunch of devs, right? We'll go get they already started the game engine. It's going to be open source. It's going to be audited. So that way it's not it's not rigged. And then they're going to use that money to really build this thing out. And the people behind it, like Faradukin, the other guy they have 2 other partners. One's has his PhD in programming. Another one actually does horse breeding and racing in real life. He's another partner of theirs. I think they have a good team. So they go good core team. I think they're going to do it. And I invested heavily into them because I think it's going to be fun and it's going to see huge growth.
That's incredible.
And that'll connect.
What was this again?
So it's called Equin.
Equin.
Yep.
EQUIN.
Josh is about to have some horses.
Well, because I have I when I quit my job about 2 years ago, a buddy of mine was like, "Hey, I have this Cardona thing that you might want to put some money in." So I actually just, while we're sitting here, looked at my account that I did about 2.5 years ago, and I think I probably put like, I don't know, $50 in it. And I just looked and it's like, I have like $1,000 in there. Yeah. And I didn't even know, like I just reset my password as we're sitting here. So I was like, wait, ADA, like I have this. And I just looked and I was like, and I haven't done shit with it. Right. It's just literally just been sitting there for 2 years. So now I want to go buy a horse.
Right. Well, no, that's smart. Right. So what to me is like your entry level might have been, I don't know, 40, 50 cents, right?
Yeah. Yeah.
But if you look at market trends, like as price goes up or down, it doesn't matter, but you don't have to stay in the same lane, right? Like I think about this all the time. If I take my ADA from 4 cents to say $1.30, right, and I buy a horse, say for 250 ADA, I get 1 skin, 1 jockey, and 1 horse, right? And then I go right now, I have a horse that's ranked in the top 50, top 60. Not saying he would sell, but I could probably sell him for 10 to 15,000 ADA. That will pay for all my horses combined, right? And that's just right now. You can look at Zed Run, Pegasus, that's on Matic. Those horses are going for $13,000 to $15,000.
Holy shit!
And you can breed horses. Correct?
Oh, you're going to be breeding them. So after they say you don't want to breed until they're 6 years old, like real life, because you don't know the genetics of the horse, and they don't want you to breed just the breed. So there's an algorithm they're going to use to say, okay, if the floor price, the cheapest price in the secondary market for any horse is say 300 ADA, the breeding cost might be 250.
Okay.
Right? Because they don't want you just to breed, but also they don't want everyone just going and picking up secondary horses on the market. So there's some gameplay in there, some game theory in there. But you also going to flip it. So if you take, if you can ride ADA up from 4 cents to $1.30 and then go to a whole different market and use case, get an equine horse, say for 200 ADA and sell that for 2,000 ADA, that's a 10 times come up off of what you already made 3,000% on.
Yeah.
Right. So that's what I'm talking about. Oscillating, switching hands is I don't marry my coins. I look off, percentages. I go off of growth. So as much as I like ADA, it's all going to go back to at the end of the day. At the end of the day, I'm going to take every NFT I own. It's going to go back to ADA. I'll stake it. With also staking it, I'll loan it out on DeFi, and I'll get 12 to 14% a year on it. So, if you have $1 million, you get $140,000 a year, and I don't have to work for it.
Yeah.
It's
like
wow, it's just like you just created the life of freedom
right? Buy my personal time back, right?
So I have a question for you. How, if you could give me like just an estimate on how many hours that you spent researching this, what would you think? Like an estimate, like.
Oh man. So I would say average on every day I try to spend about 2 hours in any form of virtual, whether it's between, so I built up a good Discord, Telegram, Twitter not following, but I follow. So I know trusted people that I trust. I trust what they say. So I almost let them do the research for me. So I'll go on there for 10 minutes a day on Twitter. I look at people like Fettuccine, Faradukin, the Uttermost, to see what they're saying, because they're so plugged in and they have such a community that follows them. So like, hey, look out for zombie chains. Well, most of the time he's right. So I'll go on there. I look at the tokenomics of zombie chains, how many they're minting, how many followers they have, what's the price, right? What's the roadmap look like? And then that's my own research. But to get to that point, I didn't have to spend 5 hours finding it. I used someone else's knowledge to get me there. So I built up a good network. So a lot of my time was, when I first started reading stuff about crypto, I maybe understood 5% what I was reading. Then I would, dig in. And then now I pretty much understand most of what I read. And now I can, within a couple minutes, look at a project and determine, okay, this is something I'm interested in, something I'm not. Like if you do, say you started an NFT project for this and you gave 50% of all supply to you guys, I wouldn't get in it because you guys are holding the bag. So if you guys ever sell, I'm screwed. So I look at, those kind of parameters. And some of the projects do that. I mean, a project the other day minted and they said, hey, we're going to give 100 Discord members that had early access that followed us from the beginning. We're going to give them 10 minutes to mint as many as they want. There was 1,000 supply. They minted all but 200 of them. I don't want it because now you have a couple people holding
a shit ton of it. Yeah,
and it's not in the community. If you want to grow, you want it to be in the community's hands. Like I know people that start NFT projects up and they give everything away to the same people or the same friends. Well, that's bad too because they're never going to sell it and it's not getting the community. They're not getting awareness. You're just going to sit in a wallet and disappear, right? Like if I would start anything up, I wouldn't let none of my friends buy anything from me. I mean, I see what they're doing, but you're actually just hurting yourself. Like you truly want the community to hold your stuff.
So would you rather have it like every person? So let's say like we started something and we sold it to the community. Yeah. Would there be a certain percentage that we should keep? Yeah, like 15%, 20%, and then the community has 80%?
Ideally, it depends what you're creating, but ideally, if you're not creating a token, say you're creating an NFT, ideally, when you go to sell it, that's your money, and then you put royalties on it. So like some people don't agree with the royalties, and they do, doesn't matter. But let's just say, for the sake of argument, we agree with royalties because you're going to expand beyond just a piece of art, right? Like, i.e., you're going to make a utility. Like, hey, if you hold this beacon utility or this beacon NFT, you get a free T-shirt, right?
Okay.
So you buy the NFT from us, say it's 5 ADA, and then by holding that on this snapshot date, say August 5th, we're going to say every wallet that has one. You're going to email us your validation that you're an NFT, and then we'll send you a free T-shirt. That's utility, right?
Oh, okay.
So in that regard is, if you give them to your mom, your sister, your brother, that's good and all, but how's it help you reach the community, right?
Yeah. Yeah.
So it's short-sightedness. So it's like you can't get anywhere by doing anything, by taking shortcuts, right? So it's like if you understand those kind of things, the projects that do that say, hey, okay, we're gonna let our early investors, or early adopters, which is probably friends and family, soak them all up. They're dead on arrival to me. So gotcha. I won't even. It's not like Space Buds, for instance. There's a couple wallets that hold a ton. That's because when you can mint them, not anyone knew really about NFTs. I was 10 minutes late. I was driving. I could have got one for 10 ADA. I mean, they're 5,000 ADA now. You could have minted them for 10 to 35 ADA. So some people were smart enough to like buy.
Yeah.
Right? So that's different. But you can also see as the price grows, right? Early people that got in, their wallets go from holding 110 Space Buds to 105 because they're taking some profits,
gotcha.
Which is good. So now you get diversification out in the community, right? And I would be worried. So if someone bought 110 Space Buds and say they have the Bull or the Rhino, which is really rare, and they have some bunch of other just random ones, and the price went from 35 ADA to 5,000, they didn't sell one, I'm nervous because at some point you should take profits, and at what point are you going to then dump?
Yeah.
Right.
Yeah.
So it's like that's why they call it support levels. Like when you look at charts, like you want people buying and selling in different sectors. Otherwise, if Timmy bought it at 4 cents and didn't sell it to $3, well, there's about to be a big dump.
Yeah, it's like what Elon Musk is doing with like Dogecoin and all that, Dogecoin and all that kind of stuff, buying mass amounts and then
I mean, I don't know if he's really selling them. He claims he's not. I don't know if he is or not. I don't think he. My personal belief is I don't think he really cares about all this. I mean, he cares about going to Mars and bigger things.
Yeah.
Like, he's not worried about the
that's
fleet
like how
stuff.
it is. Like
Right.
it kind of seems like that's how he's funding.
Well, he's
it.
a troll. No. I mean, he has other programs, and I mean, he just sold billions of dollars. I don't think he's worried about that. I think that's more of a troll. Like Elon Musk is that unicorn, right? Like most people that are really intellectually smart, they're not socially active. Like Vitalik Buterin, who guy who created Ethereum, perfect example. The dude's a wizard, but like socially, he's not maybe as active as, or as but he's not like a Joe Rogan, So I think he's that unicorn where he does have fun with the community and like you make what you want of it type thing,
Gotcha.
Because I mean, he's the richest man in the world. It's worth what, $300 billion?
Yeah.
I don't think he doesn't care about that.
Yeah, he didn't give a shit.
No.
So
He likes seeing it. He likes seeing the outcome.
Yeah, right. I mean, he might just think
Gives him a giggle.
right, exactly.
Yeah.
I think he might think it's cool, whatever.
Yeah.
But I think people took what he was saying. Like, there's no development on it, right? So, like, say Doge, something happens, there's no developers on. They can't agree on it. That's why Bitcoin's somewhat. I mean, they're getting better, but it's a tribalism. It's like, how can I play on a network that actually needs to be developed over time if you want to keep up with the technology, right? So the problem is who pays and who decides, right? That's in anything. So like, for instance, if you're third gen crypto, like Bitcoin's first gen, Ethereum second gen, something like Cardano, Algorand is third gen. So if we want to upgrade the network, well, who pays and who decides? Well, let's let the community, let's make a catalyst program. Well, depending on how many tokens you hold, that's how much voting power you get. So I can go inside the wallet and I can say, here's like every 6 weeks, they release a couple $1 million in funding. I go in there and say, okay, I like this program. We need, bridge to Solana. We need, a back end wallet, whatever you want to vote on. There's different sectors you can vote. And then Catalyst funds them, gives that developer money up front to fund them to create their project, right? Mm-hmm. So it actually brings utility to the ecosystem where Ethereum doesn't have that, right? And then you actually have identity, which is called the DIDs, that you can go on, you can store and manage your own identity on there, right? There's a lot of stuff that, a third gen crypto will bring that the second and first gen can't. But Bitcoin doesn't need to. That's not its role, so to speak.
Gotcha.
But with Loopring coming in and stuff, I think Bitcoin will have some smart contract capabilities. They just won't be because they are they're not extended USDO, the UXDO model. So Bitcoin's the same accounting model as Cardano, which is Cardano's extended UXDO, which means you can do more with it. And so does Ergo. I think you're going to see a lot of movement in the extended UXDO model.
So based off of like metrics and stuff you've looked into, you think Cardano is a stronger pick than what Bitcoin is? Or?
Well, I mean, no. You have to look at growth and what risk assessment. Like, think about if we're a country, right? We don't care, or a big Fortune 5 like JP Morgan. We don't care about upside, right? We want something that's stable and it's going to stick around.
Yeah.
Right? We don't need risk. So, like, you see it oscillating hands. Bitcoin is first held by the community, a couple $1,000s. Oh man, went 4,000 or 5,000. I'm selling, right? I made my money. I'm happy as could be. I mean, I knew a guy in New York that sold at $26,000. He worth multi-millions to help me out mining. And he's like, man, I should have held on to it. But guess who holds his coins now? Probably, Miami's putting their whole city on the books. So places like, Miami, city, Miami, governments are buying it. So they don't care so much what the price is and the transaction fee is $150, right? If it takes 10 minutes to move $1 million,
they want stability.
Yeah, stability costs $80, perfect. Where you move in the legacy system, financial stuff, you move $1 million, takes 3 weeks and $20,000 in fees, right? So they want stability. Where someone like me, I want some upside. So eventually, what I will one day, because Bitcoin's going to be very valuable, I will take some of my Cardano gains and I will have a Bitcoin or two. If you hold one Bitcoin, you have more than like 99% of the people out there. So, and you could use it to loan against, leverage against. People want it. Even your dad likes Bitcoin now. Mm-hmm. He's talking about. So it shows you, right? So
yeah, even my dad's been talking about it.
My dad holds
into it and shit.
Right.
Yeah.
I mean, and that's interesting. So it's an interesting concept. So eventually, I will hold Bitcoin, but right now I'm taking the upside because I'm young, right? I have years to wait. This is not overnight game to me. I can wait a couple years. I'll advance my positions, and then when the time's right, even if Bitcoin's $100,000, then I don't care because that's pretty much 2 times. I think Cardano in the next whatever futures can go $7, $8, $10. It's going to follow Ethereum's path. Mm-hmm. If it's the same market cap as Ethereum, it'd be around $8 to $10 roughly, and that's 6, 7 times. So why would I go to Bitcoin now?
Yeah,
and I can get more utility, and I can get staking, and you eventually you'll be able to take your Cardano, wrap your Bitcoin, and stake it. You can do wrap coins. So I can take my Ergo, wrap in Cardano and stake it and get 5% and then DeFi that out. You can do liquidity pools. I mean, there's so much stuff you can you can pick your poison. If you want to do no work, just stake it and then eventually DeFi it out when that time comes.
So let's get into like these like loans you're talking about, right?
Yep.
So these loans are going into individuals who also who are looking for it.
Yeah,
correct?
it's a blinded. Yeah, it's
Okay.
a blinded agreement.
So what happens? They don't pay you back.
So perfect. Just like anything else. So like right now, so think of the legacy system, right? You take out a loan, say you get a Capital One loan, right? Say it's like a $3,000 credit card limit. You don't pay it. What's the worst happens? They send you collections, and you might get a lien under your name. No one really gives a shit.
Yeah.
I mean, let's be honest. Like,
Yeah, it is
people
what
do
it
it
is.
all day long, every day. I mean, they have collections agencies. That's a whole side business just to try to collect a couple pennies, right? But let's
Give me
say-
1 penny this month.
Right. And so that's why, most people, I think my age, even younger, don't really see value keeping dollars in the bank because it doesn't grow, right?
Yeah.
Well, let's just say your dad holds 1 Bitcoin, right? But you really need a new truck. You're like, Dad, look, like I don't have the money, but how about this? Put your 1 Bitcoin up as a collateral, right? I'll pay. I always pay all my bills, right? I can get that interest rate lower than the bank now, right? And I can get my truck. So you can get your truck. You put the 1 Bitcoin up. Let's say your truck's $40,000. Well, Bitcoin's $44,000. That loan you want, the person who has it out there says, listen, if you provide 100% backing, i.e. 1 Bitcoin, because you're trying to get a $40,000 loan, I will give you a 12-month loan or a 24-month, whatever the month is, say for 4%, right? You're like, deal. Now, let's just say you have a bad accident or something happens. Now you can't pay, right? Well, your dad's going to look at that as the co-signing and say, well, look, Bitcoin's now $60,000. I don't want that smart contract to liquidate my Bitcoin, sell it to the market, pay out the loaner plus his interest, and then give me back my leftovers because that's what's going to happen. After you can put in a contract, after 30 days, no payment, it sells the Bitcoin, through a decentralized exchange. And then it gives the loaner his money back plus interest and then pays me the rest. So I'll get $18,000. Well, that's great. But now I just lost my asset that can grow to $100,000.
Yeah.
Right. So if you truly have an asset that is not a depreciating asset, then you're going to value that a lot more than, say, collections. Right. So your dad, what he'll do is he'll make the payment on your behalf, pay the thing off. He'll probably sell the truck and then he gets his whole Bitcoin back. And if his Bitcoin grew from 40,000 to 100,000, that's motivating, right? You want that back.
Yeah.
So that's collateral, but you can make your collateral whatever you want. So if I want to make my collateral, say 70%, because I'll take a little risk, but now my interest rate's can be 7%, right? So now you can change the game a little bit because, like, hey, look, if I loan out $10,000, sure, if someone doesn't pay and I eat 3,000, that's really going to suck. But at the same time, if I get an extra 3-4% out of somebody, then maybe it's worth the risk to me. I don't know, right? So the individual can set the parameters to whatever they feel comfortable with. And then someone on the other end that doesn't even know you, they can be in, Nepal, they can be in Singapore, they can be somewhere else. They can say, hey, I like this. I have enough collateral. Why not? Right. So everyone's going to be different. So you might only have to take 50% collateral. But that interest rate might be 12%. Right. And then you can join a liquidity pool where they lessen that risk too. Like you can go on, they have, different liquidity pools that you can join, like even within like, Binance and stuff like that. That'll be lower, of course. Like Liquid Finance will be the one I'll be joining. I like what they're doing. They're based out of Africa. They had the Haskell training program and stuff. So it's like the Plutus Pioneer program, they call it, where they train individuals in Haskell and how to use it and stuff to help build on the network. So
that's what you were kind of touching on earlier, is that they're investing in like the infrastructure in Africa because there's no like stable government.
There's no stable government. And that's the thing. It's like to make a deal in Africa, it's like pulling teeth. It took them years and years. So it's not easy because once you make a deal, someone new comes into power and they change it up, right? So you have to make an alliance like with the surrounding governments to where even right now they're in a civil war in parts of Africa where like they made these deals where nothing's guaranteed. It's frustrating, but it is what it is. And they're putting students and teachers on the blockchain first, right? Because give them identity, put their grades on there, and then guess what? Now they can go out and do business. Now they can be trusted. Like in parts of Africa, like when they have a civil war and you come back, they use like the grandma system, right? They say, okay, they go to the oldest person and say, hey, who owns this house? Who owns this house? Because what happens is in the local government, oftentimes it costs you more to get the house in your name than what it costs. So why would you do it, right? So that's the kind of, the transitionary stuff they're trying to get away from, because if you do a business there and you get ripped off, why are you going to do business? You don't trust the government. You're in civil war. Your house gets taken over, whatever the case may be. So you need the infrastructure for sure.
And how much do you know how much like they're putting into this?
Cardano's spent a lot of resources, a lot of time. I mean, they actually have a home office there with Singularity Net. They're actually going to team up. Or they made Sophie the robot. I don't know if you remember that. They got its own citizenship.
Yeah.
At Bank Wurzel, he runs that, and they're actually going to be cross-chain, and they're going to do some unique stuff. They're going to use some AI on the stablecoin side for Cardano and stuff to help with the stablecoins and whatnot. But I mean, let me just put it like this: Africa is said to have $5.6 trillion in unbanked money. So imagine if you can bank that. Imagine if you can put that wealth inside of a system.
Yeah.
Right.
Yeah. Holy smokes.
So, it's a lot of money. So, and, everyone's competing for Africa, another place around the world that would need this technology, but they do it because they have to compete. And then once they can compete, watch out, because they're competing because they remove middlemen,
Do you not think at some point, like, do you not think the government's going to come in and be like, we're going to choose these ones?
No, I mean, they already kind of done it, and then they will, but like
obviously like Bitcoin and stuff, the bigger ones, but I'm saying like all the smaller ones.
It's hard, right? Because they kind of form an alliance. Even like when they attacked Ripple, the whole crypto community was like, hey, whoa, right? They come out with new regulations about reporting if your security, like, like for instance, hey, if you're getting staking rewards, you have to report your ISP. Well, technically in a true decentralized system like Ethereum, it's impossible, or Cardano, it's impossible, right? Like there's ways you can do it, but they don't know how to enforce it. There's reports that came out that said the IRS has looked at the newest laws and they don't know what to make of them, right? Like this is all new technology, and you're talking about the people in power, or hate to say, are not really in the loop, So it's going to take a while. I mean, like anything else, like technology is faster than their laws. It's going to take years. And by that time, I've already made my positions. Other people make their positions. And then people that come in they'll come in because it's convenient, not because it's so much an investment, right? And then when you invest, it's all in speculation. Like Tesla's like 500 times over their gross evaluation, because you're investing in Elon, you're investing in his future, right? Like same thing here. The people in early, they know the risk, they're okay with the risk, but by the time there's winners and losers, no matter how they're picked, all that's settled, right? Now you're using it because it's convenient. You're using it because, hey, you don't have to wait for your bank to open to make a transfer. You could transfer him within about 3 seconds.
So let's say you have $1,000, right? And you just put it in Cardano.
Yep.
And I don't know how the system really works on the inside because I haven't personally seen it. So let's say you do that. You're saying over the next 15, 20 years, you don't look at that. You're going to go back and you're going to see a surprise, because it's just only going to.
Well, no, I think anything, like, I don't care what it is. You should understand what you're buying and how it works, right? And then there's also going to be market trends. I mean, there's going to be wars. There's going to be, COVID. Like, there's no way that I would have known that the pandemic. I mean, I was texting a friend. I was like, speculating, oh, this could be $1 by this time. You just never know. But you just don't know. You don't know the growth rate. You don't know what's going to happen. So everything's a risk. Nothing's guaranteed. But nothing lasts forever. I mean, Apple's going to fall. Microsoft's going to fall. Everything has its time and place. The question is, are you good enough to time it, right?
Gotcha.
So if you follow the market enough, you should be able to say, hey, like for me, I don't want the top of anything. I'll take 3/4. If I get 3/4 at the top of anything, I'll sell it and I'll be happy as a clam, because I'll go into a new industry. I'll go into rentals when the market comes back down, and I'll double up there, right? So it doesn't matter to me. I don't care so much about maximizing every little thing out. The question is do I make enough of the right moves at the right time to where my efforts weren't wasted?
Yeah, that makes sense. Now, you said earlier that you have a Discord and a Telegram and stuff. Like, you run that? Like,
yeah. I mean,
you have a group?
No, well, I mean, I'm in some private Telegram channels that I got started early that I got invited into.
Oh, okay.
Because they don't want 10,000 members and just like when moon.
Yeah.
So I go in there, and so like if I know there's new tech coming out, I'll just like search in like Hydra, right? I'll see what the most recent like articles they have on there, because I'm not a big proponent of going on Google and looking, because that's mass media, that's big dollars behind it. It's normally old, it's biased, right?
Fuck mass media.
Right. So I'm more in the smaller niche groups that go find these like sub articles that are like written by like community members that have like good comparisons.
Okay.
Stuff like that. So that's where I lean, because there's going to be like what's called FUD and fear. There's going to be FUD and fear no matter what the technology, what is, because like right or wrong or different, even me, like I hold a good size of Cardano, so I'm going to shill Cardano because I believe in it, right? Because that's where my money lies.
Yeah.
But doesn't mean that like an Algorand or AVAX or Elrond or Harmony One isn't good. They're great, actually. I owned all of them. I owned like 15, 20 different coins at one point, and I just traded out and up until I got to the one I really liked, right? And that's like a timing thing. but they're all going to work together, and they started already doing that, like with the Web3, AVAX, Elrond, Harmony One, all these good chains built their own code. And yeah, sure, you can go, it's open source. If the good ones are open source, you can go copy them, but they're so far ahead. Good luck.
Yeah.
Like, how are you going to get the community? You have to go find, the 2 million people that truly believe in it. So that's when people are like, oh, well, why can't you copy them? Try. Go ahead.
Yeah.
I mean, you can.
More power to you.
Right?
Yeah.
I mean, people have done that with like Bitcoin, right? That's how you get Bitcoin. That's how you got Litecoin. And then that's how you got Doge, right? You take the code, you change a few lines in it, change the block size, the time, whatever. And now you got a Litecoin, right? Like, that's why I call them Satoshi Light. And people like it and use it. Like, I like Litecoin. If I want to store value, I typically, if I want to bring money into the market, I'll hold it in Litecoin because Litecoin doesn't go up or down too crazy because they have a huge community.
Gotcha.
So it's another aspect where if you hold something like Doge, you can mint as many as you want forever, right? It has no cap on it. And also there's like a couple entities that hold a big supply. XRP Foundation owns like 60% or 50% of their tokens. No thanks. I don't want no part of that.
Yeah, that's what you were talking about earlier.
Yeah,
okay, I'm tracking.
I want token distribution. So Ergo, 95% of Ergo is held by the community. And Ergo is a nothing coin. It's valued at 200 million. But the technology it has should be top 10. But now they're focused on marketing. They wanted to make sure they had the technology there. Now they're going to start focusing on marketing, tier 1 exchanges. So I like the way they're doing things. So like Harmony One did things right. I like the way they did AVAX, Elrond. I like those. So it's like, I'm not a tribalistic person, but I definitely think there's some standards that the community, the people that truly day trade and or hold long term understand. Like whales, if you notice, the market moves at nighttime. Why? Because if you're a whale, you don't really necessarily market buy. You can do over the counter buy or sell, but you use a market maker at that point to post it at the end of the day.
Gotcha.
That's why you'll see those because they don't. If you're buying $2-3 million, you can go to a mining farm in Bitcoin and say, hey, let me buy these. And you can use a market maker to post it for you. And there's things, they have like things that call an ergo mixer because you want to be able to hide your identity. Like if I bought a house, I don't want to let everyone know I bought a $2 million house. So there's some things that should be private.
Yeah.
So they have things called an ergo mixer for that kind of stuff. Because proof of work does give you more privacy than proof of stake. But hey, if you can be a hybrid system with proof of work and proof of stake, like Ergo is going to be, and you can, cross chain Ergo with Cardano, well, there we go. So I can also hide my contract while also taking Ergo and staking Ergo to make an extra 5%.
Gotcha.
Right? So you can take a little bit from each platform and bring them together to really enhance what you offer.
Wow.
And this is all just happening off the grid, basically.
Yeah.
Correct?
Yeah. Right? I mean, you started with a small community of people that like really would dive. I mean, I started researching, understanding this stuff in March, 2020, right? And I would tell people like, well, how does this work and that work? I'm like, well, hey, ideally it'd work like this, but they're yet to work out the details because you have the basics and then you have to, there's so many things to fall into place. It's like, building all the parts to your body, then tying them all in at the end, hoping it works. Right. So all this stuff I kind of understood and know, and now it's coming out like with the smart contracts, the Plutus backend, Hydra they're working on. It's kind of cool to see because I knew about it 2 years ago, and the price shows that the community agrees with me and Charles and whoever else bought at that time.
Mm-hmm. That's a really like cool way to like create just like a currency, right? It's just a community based.
Yeah,
that's how you create more control over what we have in the community. It's just all coming together and making the decision as a whole. Because that's really what it is, right? Like if we all say this pen's $1 million, the pen would be $1 million, right? Because it's a belief. We believe this pen's $1 million. Yeah. But let's get into the mindset behind things, right? Because there's a lot of details that go into what you're explaining.
Yeah.
It actually is making my head explode over here. Listen to it again. But let's get into what do you do discipline wise to keep yourself on track? How do you keep yourself from panic selling or anything? Because you've done well so far, right? Mm-hmm. So what are you doing to keep yourself from
Well, so I'm a very simple person. I'm not a materialistic person. As long as I have fun and enjoy my family and friends, I don't care if I'm sleeping on the ground or, sleeping in $1 million mansion. That stuff doesn't motivate. Money doesn't motivate me at all, actually. But my time does. I want my time back. I want to be able to do what I want. So basically, at the end of the day, I just ask myself a very simple question. Either I work 30 years or I don't, right? So if I work 30 years, then this is all for naught. Cool. I had fun doing it. I learned a lot of new stuff, met a lot of cool people, and then I have a new skill set, right? But ideally, in the next 2 to 5 years, if I can exit, and not work, then I won, right? So it's an all or nothing game for me, because I don't care about an NFT. I don't care about a picture. I don't care about space, but none of that. All that represents to me is that a growing community that possibly wants it, and then I'll switch it off to them, and I'll go get a bunch of rentals, and I'll do whatever I want, right?
Yeah.
So,
because you're not even a gamer, right?
Nope.
You're not really into like the gaming, and so this is purely just smart investment for you on what you you kind of just got into it, and it was a smart risky investment for you to get into.
I mean, there's time and luck in everything you do, right? Like, you live a long life, say 40, 50, 60, 70 years of adulthood, right? You're going to have tons of opportunities. The question is, did you take them, right? I'm a big proponent of my time. Like, when I could have first bought Bitcoin, first of my time, what my income was, it wasn't worth it, right? To me at my time, like, listen, I'm young. I'd rather live. I'd rather go on trips, travel.
Yep.
This is not for me, right?
Yep.
Got it. I could have done well then, but I waited. So then when the pandemic hit and I'm going to sit at home and I'm in a little bit better financial position, I'm like, well, I drive a piece of crap car. I drive a $1,500 car. I don't care. I could use a new one, but I'll take that $5,000-$6,000 that I would put in a down payment possibly and go play in the market. I mean, I knew about stocks. I don't like the way they're manipulated. So I never really played in that too much. And I think I understand finances, fairly well. So I said, you know what? Like, there's no risk to be had here. If I wreck my car, brand new car, I lose $5,000. So let's do it. So right now, all my gains, I mean, I took money out. I'm redoing my house. So even if the market crashed went to zero, I made it out quite well, right? So I don't have fear. I mean, you're talking about 7 billion people in this world. When I drove into New York City when I was mining in New York, I had an apartment there. I was mining helium. That's another great one. It's just amazing. You look in the city, there's millions and millions of people stacked on top of each other, right? So it's like, man, like, there's so many people out there, and you're talking about an active user base of, say, I think 1.6 million, 2 million Cardano wallets. Mm-hmm. So if this thing gets used, you're talking 20, 30, 40 million wallets. So the numbers suggest that, okay, if that's the case, then the value is going to go up, right? So when you start looking, like, zooming out to the 1,000-foot view, like, okay, like, we're not bad, right? Like, we're still in the beginning times. People are like, oh, I missed out. Yeah, I would say you missed out on Cardano. If you want to get rich, don't do it. If you want to have safe money and over long periods, like, you don't need to take your money out tomorrow and you can wait 6 months, a year, throw some in for sure. You're going to do well. You're going to do better than your bank, or get some NFTs, stuff you like first and then invest in it second. Cause you're going to have to like it. Otherwise you're going to hate it what you're looking at.
Oh yeah.
And then secondly, there's other good, in an open market like this, there's other good projects like Cody Pay. It's in a fantastic technology and how they support, the backend wallet. So if you want to pay to Ethereum and I have ADA, I don't want to go through an exchange and sell my ADA for Ethereum and send that to you. That's too cumbersome. Grandma and grandpa won't want to do that. Imagine if I can go into my wallet, because there's a bridge, and I say, okay, Tyler wants Ethereum. I'm going to pay him in ADA. And then guess what? I can pay that fee in Ethereum or ADA or any other token I hold. Mm-hmm. Ethereum, you can't do that. Any project that lives on Ethereum's chain, you have to pay the gas fee in Ethereum. Well, that sucks, because I don't like Ethereum. If I want to move my Poly or Matic A to B, I have to pay that in Ethereum. So I have to go buy Ethereum to pay that fee. Mm-hmm. That's dumb. You're a second-class citizen on their network. On Cardano, with Cody Pay, it will do it inside the wallet. It will say, okay, take the ADA, use an automatic market, do centralized exchange, sell it to the market, get the Ethereum, pay you all behind the scenes. You get your Ethereum. I use my ADA. I don't have to know how it works, right? So that's a good use case. So that's why Cody Pay, I think, is going to be big. Ergo's still dirt cheap. Ergo's at 220 million market cap, which is like a nothing in the crypto space. So all those, I think, if you're new in the space, that's what I would look at. A Cody, a PBX, that's a NFT cross-chain platform coming out. That's another interesting.
Say that again. What is that?
PBX. That's another cross-chain NFT platform coming out. I think, and once again, and you're talking cross-chain NFT platforms. That's one of the first ones I've seen that I think has pretty good promise, but there's going to be 10 of them out there, right? Like, so just because the first doesn't mean they're best, but if I buy a little bit into each of them while they're low, I can't lose, right? Yeah. Especially if you're talking about OpenSea doing $2 to $3 billion, this year in sales. Like, that's ridiculous. And it's only growing, because once people start putting that money in, they're not so quick to pull it out.
So when you get into like the real estate side of things on the digital and then in the real world, right? And as far as like, do you think that's a possibility of like a flow?
Oh,
because like we're at like a high point.
No, I mean, the high point's relative, right? Like, so you have all this inflation. You're talking about 20% inflation. So the money's got to go somewhere, right? So what people did, their stimulus checks and stuff, either they spent it or they threw it into investments, right? Like Dogecoin, whatever, right?
Yep.
So inflation has to go somewhere. And typically inflation means more money to the top, right? Less money to us, more money to the top. And you see it all around. So I think inflation, the only way you could really truly offset inflation is go to a new system. Go out from a dollar to a new system, right? So that's kind of what's happening here. It's like, okay, if I was a conspiracy theorist, which I'm not, I would say, okay, what's a way we could save the dollar without destroying the dollar, right? So I would say, okay, we could say the U.S. government makes their own digital dollar, kind of like what China's doing, right? But the only problem with that is they say, hey, if we make our own digital dollar, you have to accept it. Which is fine, okay, deal. I'll take that digital dollar you give me, and I'm not going to keep it because the dollar sucks. I'm going to take it and throw it into Cardano, right? Well, if everyone does that, now you artificially inflate Cardano, right? Because now everyone's using that artificial money, that can never be capped. I buy my Cardano, and now you make the price go way up. And when that happens, I would be skeptical because now people are buying in, creating a bubble.
Gotcha.
Right. So the problem is like right now, Cardano's capped at like say 41 billion tokens will only ever exist. Bitcoin has 21 million. So the only way the inflation would truly kill it is if, the U.S. makes their own digital dollar instead of giving you, your tax returns in a check or money, they give it to you in the digital dollar. That makes sense. Now we're going from dollars to crypto, but if it's not capped, well, now we're back to artificially, inflating, cryptocurrencies. And that could be an issue too. So, I mean, that's years ahead, years out. Like I said, and who knows how that's going to wash out. I'm not sure.
Your plans to be in and out before any of
that.
Well,
I'll be back in. So what I'm going to do is I'm going to liquidate at some point. I'm going to liquidate all my NFTs. I'll liquidate most of my coin. I'm going to go into real estate. I want to buy 15 to 20 duplexes. And then when I buy those in cash, I'll leverage those to get me a couple more. But then when my renters are paying me back, since I own them all, I'm going to get right back in the market. So I'm young. Well, what am I going to do with $30,000, $40,000 a month, right? Like I'm a pretty simple guy. But at the same time, I recognize, building wealth, not for me, just for, for people around me and stuff. So I look at that and I'm like, okay, if they can fill my bags and say in 1 year, I still work my job. I still live in a simple life. I make $250,000. Well, why not throw that right back in a new up and coming, technology in the market? There'll always be one.
Yeah.
I'll be in the market. I'll know roughly what I think a good bet is. And then guess what? I double down and, once again, and almost at no risk because I still have my houses I can always sell. I still have my income I can always have through the rentals. And now I'm right back in the market. So, I'm not limited. Like I said, I don't play video games, but guess what? I'll invest in one if someone else does. Like, right. So I'm not very much of the mindset that like I have to understand it to make money at it. I just have to understand that, you can make money at it. Right.
You have to kind of get the concepts in behind on how to make money on it.
That's what I was just about to say. The key concepts, but the details, meh.
Yeah. I mean, there's avenues. I mean, you look through life. I mean, like I said, you start a small business. I mean, there's always going to be something you could do to leverage your position. The question is, what kind of time and effort you want to put into it, right? So like you have to be realistic with yourself of like what the expectations are, the time, the effort, and then nothing's quick and easy. Like I spent many hours researching. I made some mistakes, but I don't care. Like it doesn't matter to me.
You said something earlier. You're like everybody gets lucky, and like you kind of just got lucky, but it's like no, you put in the research. Right. And you put yourself on that like frequency of drawing in that experience.
Well, I got lucky. I was sitting on my couch as I got lucky. I was like, hey, let's just read about something. Let's look at see what Bitcoin's doing. And then I started reading an article and I got lucky that I even was doing that because that's what got me into, why is the transaction cost so high? What are they doing to build it? And then you start looking down that path like, okay, well, I understand it, but there's got to be more to this. Like this kind of an industry, there's got to be more. So then I started diving in more, reading more. So it's like, agreed, but the pandemic didn't happen, I wouldn't even looked at it. I would have been busy doing my own thing, right? I've been busy working, whatever. But the pandemic allowed me not to drive 35 minutes to work each way. So that's another hour I get every day to utilize my time. So that's how I look at it, right? Like,
so you just became disciplined with your time management.
Yeah, I mean, yeah, right. I mean, my time's the most important thing to me. So even if you told me, hey, Chris, if you spend, I don't know, an hour a day doing X, Y, and Z, you're making $1 million, I'll probably tell you I don't want it, right? I have to like what I do and how I do it, and
it's not the money. It's the the freedoms that
you
get
the freedoms,
through the
process. I don't want to be
process.
attached to something because like if you tell me I have to do X, Y, and Z, well, that's at first, and then next thing you know, I'm it's a labor of love, and I have to do it to keep that wealth, right?
Yeah.
Well, like starting a small business, you have to keep grinding and building. Every time you grind and build, you're building higher and farther, but you're adding more complexities to the problem, right? So that's why when I get into something, it's like, okay, as I grow, do I have to add more complexities and more time into this? If the answer is yes, then I need a partner. If I can't find a partner, I'm not doing it because I like my free time. I like having fun. I like traveling. So why can't I have both? So I will give up, like for the horses, I spent 15 to 17,000 ADA. I found a good buddy who's really good at gaming. He found some good, ideas. I said, look, man, let's be 50-50 partner. I'll put up the equity. You just, run half of it with me. We'll be partners.
And how many horses do you have?
I have like 62 horses. I have like 110 skins, 62 jockeys. Mm-hmm. So I think ranking wise, I'm the 8th or 7th biggest holder in equine on the network.
Shit.
So that's why I couldn't manage it myself.
And that's that one I think is going to be like a massive one.
I think so too. I think
that's going to be huge when you get into the virtual horse racing.
Mm-hmm. And then eventually you'll be able to bet on it and stuff. Yeah. I don't care about any of that, but I do agree. So
that's going to grow the market even even more.
Of course, and bring new people in. Hearing people in. I mean, it's just the nature of the beast. And the thing is, I've been having friends about crypto forever, not interested, but I know a lot of gamers. As soon as I told them about this, 6 or 7 people instantly dove in, like, wow, this is quite, I didn't realize this is what crypto can be. I'm like, right. So, and then think how many people they're going to bring in, right? The network effect, the butterfly effect. So as
gamers talk to each other and they're playing multiple game systems.
And that's why I looked at opportunity cost. I said, look, I can buy 4 or 5 of these, right? And just sit on them, not play them. And they're still going to hold their value because of the token itself. Even I don't train my horse gets fat and lazy, right? It's going to die in 18 months. Someone likes the ability that they can regenerate a brand new one, a random one. It could be a shitty one or a great one, right? So they're going to pay for that, right? Yeah. And if the average horse on the market says 3,500 ADA, I pay 250. I don't care. I don't even have to train it. But the question I ask myself is, why not double dip it? Why not get a partner, have them help race and manage them, right? So I can make money racing, managing my horses. And then on the backside, I'll also sell them. So I get farther faster by having a partner than doing it by myself and being bogged down. Mm-hmm. So, and that's why I do my other NFTs. All my other NFTs, I have a good buddy who sold and bought Pokemon. He did really well at it. And I recognize this. Hey, man, let's be partners. Same thing. I said, as we collect, we'll use my ADA. If you're available at 3 o'clock in the morning on a Tuesday, let's get it. And that's what he sold. And he got my most valuable one. So
nice.
And it was opportunity. You have to be there. It's an opportunity cost. And I knew I wasn't waking up at 3 a.m. sometimes because, some guys are releasing it in Belgium. Right. So once again, I'm a big believer in, having a partner and, having like call a small team because it's just, I'm not interested in doing it myself.
You're doing multiple things though, too. Right. Like you have another job too.
Right.
So you have a real job that you work during the day on top of this. So you're not just like a 9-to-5 guy. You're doing this all the time. You've just set up systems and you've made sacrifices with your time and you're now receiving it back.
Right. And then I'm just like, I keep on gambling. So if I win here, right, I take that win and I take it over here, right, and I get that win. So it's like every time I look up, I'm winning, but it's not really winning until I cash out, right? The cash out is me not working for 30 years, right?
Yeah.
But I'm adding up that portfolio to where if one of these 4 pays off, now I need not only just one, I don't need Cardano to pay off. If Ergo pays off, if the horses pay off, if some of my other teams pay off, I have 4 or 5 now avenues. I'm not just banking on one now. I start with one because that's what I thought about. And I get in the system like, oh, there's more. There's more to meat to this bone. I'm like, oh, let's do it. And I get 2, 3, 4. And then if you don't take a risk in some degree, you'll never know that you could have had 4 chances, not just one. Right. So I think that's the opportunity for me. It's like, as I get in, I just keep on rolling over wins and why not, so.
And is there like a time period where like you're going to be like, all right, I'm done working at this job? Yeah. So once I figure out, so I'm in no hurry to get the houses, right? The market's just insane right now, regardless of like, if you had 20 million to buy houses, whatever. I'm not naive to that. So whenever I do exit, I'll hold my liquidity in cash, right? I'll probably go to Puerto Rico, establish, residence for 6 months, buy a house there, pay no taxes. When I get done collecting my money, I'll sell the house. And then the only thing I paid was the 6% real estate taxes, right? Or the real estate fee. So that's kind of the idea there. And then I'll take that money, hold on to it, wait for the market's nice and prime. I'll go to places like Texas where they don't have, a squatter rights, so to speak. And I'll scoop up a bunch of properties, I feel. And then when that's the case, and I might buy properties, after a year of owning them and, getting the return, then I'll probably retire. That's the goal. So
nice.
I'm not.
What's retirement look like for you?
Retirement for me is
because you once again you're a simple person.
Yeah.
So what's retirement? Look
retirement to me is traveling and enjoying my life. Like even like working on my house, dude. Ideally, if I want to, I could probably pay someone to do it, right? And I have like this contractor who's retired. He really helps me out. I help him out with his investments. It's a good deal. I mean, he charges me next to nothing for to help him. So like, I enjoy doing it myself though. I enjoy the journey of that. So I'll do stuff like that. I'll be with my kids. I'll travel. I'll go to events, sporting events and stuff, and I might help out here and there with certain things, but really it's just whatever I want to do in that given day. I don't want to be grinding away at a job that, I'm a cog in the wheel and you can get rid of the cog and you'd still run just fine.
Yeah. Yeah. I feel you on that.
Let's get into some final thoughts here. Unless you have any other questions left.
No, that was super informative.
Yeah, that was a lot.
You came out like a spitball. I just met you today, and I wasn't.
I told you that. I was like, he can talk, man.
Yeah, I never know what to expect. My head's kind of sizzling because you gave some incredible. Because I dabbled. I'm a dabbler when it comes to this. So like I said, I literally just reactivated my account as we were sitting here because I was like, wait a second, I heard of this ADA before. Let me see what's going on. And when I started getting into NFTs with a buddy of mine, it was all Ethereum.
Yeah.
Okay. And I don't have it. I never got into it and stuff. So I was like, well, that sucks because now I have to buy that and figure it out and stuff. Right. But now you're like, wait a second. No, you can do it with what you do have because I do have ADA. So I was like, oh, fuck. Let's go.
And once you do it, it's like buying on a third party, like on eBay. On Ethereum, you have to connect to MetaMask, do this, adjust the gas fee. And it's not.
There was a lot to it.
Yeah, it's a lot to it.
Yeah.
It's just like you can get your transactions stuck for weeks on end, and then you have to go add more gas to it. I had that happen with Matic. I was trying to move $25,000 of Matic around. It got stuck for 3 months. And I was like, whenever it comes out, it comes out. Eventually spit out 2 months later, and I sold it and whatever. But I do like Matic. That's a good one. Polygon, so it's a good one. But you're right. You could do it, and it's very easy. You just get it's called a NAMI wallet. You connect it and just hit buy. And it goes right to your wallet automatically.
Yeah, that's incredible.
Super simple.
Yeah.
And I think if you get into it more, I think you'll see the value in the network, and not so much if you don't zoom into the NFT, you'll see, wow, this is really user friendly, and I control it.
Yeah. Which is awesome. It gives you a little bit more stability on something that you might not know fully about, but you are in control of it. So it's nice. Yeah. It adds a little bit to your life. But yeah, no, thank you for everything. That was a super huge eye opener.
Yeah. I love your no fear in what you're dealing with, because it's like your end goal. You have a big end goal that you're going for. And it doesn't phase you of anything, with going on around with what could possibly take place. You're just so focused that I believe in this because you put in that time in behind it for research wise. Right. So I think that's a huge thing. Yeah. Thank you, man. We appreciate it.
Yeah.
Guys, like, share, subscribe,
comment.
Yeah. Comment.
Come buy my NFTs.
Yeah. He was name dropping all the NFTs to buy. Go ahead.
I know. Yeah. Awesome.
But hey, thank you.
Yeah. Appreciate it.
Good.
Thank you.